I think there's kind of the notion that we're going to get a respite today. There's certain factors that we're all aware of that could make it less hot than previous months. So if it's the slightest bit hotter than expectations, like, whoa, we didn't even get that. And even if it is lower, the nominal read, I don't know whether that helps that much because we think it's going to get worse.
Yeah, I mean, the risks for inflation are still on the upside, no doubt, Joe. We are a little bit above consensus, looking for 3/10 headline, 5/10 core, and that does allow the year-on-year rate to ease a little bit. But you're still going to be above 8% on headline inflation, and core is still going to be above 6% according to our estimates. And you're right, if it comes in a little bit higher, probably, especially with the sentiment of the market and the hawkishness of the Federal Reserve, probably just spooks the markets. And it is unclear with gasoline prices, diesel, you mentioned that earlier, hitting new record highs. That's only going to keep pressure, especially on headline inflation. And I think the real core, the key question isn't when we peak. It's really the deceleration in the outlook over the next 6 to 12 months. And inflation is going to remain incredibly sticky. And even if we have peaked, you're still going to remain around 5% year on year for CPI by year end. That's going to keep the Fed in a tightening mode, and that just keeps the fears that we get this wage price spiral still going to be prominent.
Stephanie, Kathy made some good points. Obviously, the energy, maybe that's volatile, and maybe it doesn't mean that it's really in the system systemically. But then you go to the wage side of things, and that makes it look like that's not a great picture either. So are you assuming as an investor, Steph, that June, July, August, the way we're looking at it, people are pent up, ready to go, vacation, and they may not go on a crowded plane. So they're going, and with diesel where it is, and gas, regular gas, probably going to catch up with it. Just seems like all the cards, or all the stars are aligning. I almost used a mixed metaphor for much higher inflation during the summer. Don't you think you should buy stocks that either won't get hurt or would benefit?
Yeah, I mean, and thanks for having me, Joe. I totally agree with that. You definitely want to have, first and foremost, diversified portfolio. That goes without saying. But you definitely want to have companies that are going to benefit from inflation, those with pricing power. And we know services in the economy, they have pricing power because there is this pent up demand. But I also think that you want to have some commodity exposure as well, for obvious reasons. So at the end of the day, I think Kathy's right in terms of inflation just staying high for a long time. And you know what, we can look at core, which is ex food and energy, but guess what? We are eating every day. We are filling up our tanks every day. And we are impacted by these two items very much so. So if we have an 8.1%, if we have a 7.5% today, if we have a 7%, which we're not going to get, these are still very, very high numbers. And what bothers me and why I think inflation is going to stay persistent is exactly what Kathy mentioned in terms of wages. Look, at wages are 5.5%. We look at unit labor costs, they're up 7.3%. The employment cost index was up 4.5%. These are all year over year numbers. I mean, I know that we look at the month over month numbers for the inflection point, but these are very, very high numbers, Joe. And rents are also a very sticky part of inflation, and those are also going to stay elevated. So even if the headline number comes in a little less than expected and the market will rally on that, I still think that inflation is here to stay, exactly to your point.